And welcome to The Real Money Show. The number to start investing, as always, 1-877-8-SILVER and therealmoneyshow.com. Jeremy, it's another week. We're here in a few minutes. We're just waiting to get him on the line. Is Marc Faber, from the author of, as a matter of fact, Gloom, Doom, and Boom Report. So we'll get to him in a few minutes. First, so we'll talk about, as we always do at the beginning of the show, the market update for us.
Yeah, we're very excited to have Marc Faber on the show and discuss the markets and get his opinion, which we appreciate here on the show. So we're really looking forward to that. Let's get straight to the markets. Markets were under more selling pressure again this past week, and we put out a special precious metal advisor. Okay. So for people who want to get the precious metal advisor and be on that newsletter, you just contact us at Guildhall Wealth. Go to the website. You can sign up to this precious metal advisor. And given that the markets are so surreal right now, in the fact that we know that gold and silver are real money, that it takes blood, sweat, and tears to take this physical commodity out of the ground. And it takes literally a moment's breath to create billions and billions of dollars. In fact, the Fed has created $4 trillion on their balance sheet within the last few years. So we thought, a lot of people are going to be concerned about this. A lot of people are going to come to us and say, what is going on right now? So we thought, let's write a newsletter, send it out to our clients and prospects, and tell them what we know. What do we know for certain, okay? And I'm just going to read off the list because I think this will give anyone an indication of anyone who has the slightest frustration of what is going on with these markets. Why are they down? It doesn't make sense. What's happening? Mm-hmm. Well, here's what we know. We know that sales of Silver Eagles in October was one of the strongest months of the year and the highest Octobers they've had on record. 4.3 million ounces were sold by October 28th alone, and I believe they did exceed that 5 million ounces by the end of the month. So that is an extraordinary amount of bullion being sold through the U.S. Mint. What we also know is that the Canadian Mint is reporting an increased demand for physical bullion, silver maples, and are definitely on track to hit a new record in 2014. We also know that the Shanghai Gold Exchange has seen inventory levels drop 14 metric tons in September alone. And this has been an ongoing issue for the Shanghai Exchange and their stockpiles of both gold and silver being absolutely decimated in the last year. Mm-hmm. We also know that India gold imports surged 450% year over year in September, which is approximately 94 tons using the average price of gold for September.
They love their gold.
So already, this is just 4 points, demand for the physical bullion, regardless of price. In fact, the lower the price goes, the stronger that demand gets. We know that a yes vote, and we're going to talk about this in a few moments, on the Swiss Gold Initiative referendum would mean that Switzerland would have to buy 1,700 tons of gold at the current price, which is about $70 billion worth of expenditure. We also know, and we're going to talk about the referendum and what that means in a few moments, Russia added 1.2 million ounces of physical gold to their reserves during September, the largest month-over-month increase ever. That's a massive amount of bullion being purchased throughout the world. We know that in 2013, gold imports of 1,540 tons of gold, together with 430 tons of gold, they produced themselves. That was 2013 alone. Believe me, 2014, not much different. We know earlier this year, there was a stunning withdrawal from JP Morgan. They had an additional 321,000 gold ounces removed from its vault in a single day. And we also know that as of September 2014, open interest in the COMEX futures has been the highest since February 2008. That is a lot of synthetic supply and interest in this market in the paper side of things. Really shouldn't be that way. Typically, if the price is falling, open interest falls along with it. So it's very surreal times indeed at the COMEX. And finally, we know in comments this week, and we're going to talk about this in a little more detail, that Alan Greenspan had said QE failed to help the economy. The unwind will be painful. And I think this is a good place to jump off discussing is that Greenspan has really changed his tune. He was pro-gold before he got into the Fed. He was
a little lukewarm on it while he was there. Right?
Correct. Lukewarm being nice. And in recent weeks, he did write an article for the Council of Foreign Relations, and then he's been doing interviews and things like this, been at events, and is becoming more and more bullish on gold and more of a supporter on gold, and says that if it was a relic, a barbarous relic, and had no meaning, then why would central banks want to own it? This is a comment that would have been held for Ron Paul. These are the type of things that he would say when questioning Bernanke or Greenspan. These are certain things that he would be questioning. So it's very interesting to see Greenspan turn around and say he believes people should own gold, be their own central banks, that it's an important asset, that there is no counterparty risk when it comes to gold, that it's an acceptable form of currency. It's always been. And so you want to take note of that. Who doesn't want to take note of a government official? Granted, the Fed isn't part of the government. They're outside of the government. But it's always interesting to see what these officials say when they're finally out of office or out of their seat in terms of what they do. So this is very interesting. Now, what I think is also very interesting is that German bank, there's a German bank now that is now charging negative interest rate to its retail customers. What this means is that if you have over $500,000 in that bank institution, you are being charged 0.25% just to keep it there.
That's friendly.
As someone who owns physical bullion and who deals with people interested in that market, one of the biggest arguments against owning physical bullion is that it costs money to store it. You need insurance, you need security, that costs money. Why would I want to own a product that I actually literally have to spend money on to keep it? Well, with inflation, dollars are going down. And yes, the price is under pressure on gold and silver right now, but that is a very limited prospect when you start to consider mining operations are on the verge of shutting down because the prices are way too low, way too oversold, below the cost of production. Gold and silver have a potential to move up. The stock market has a potential to go down.
To blow up.
Currencies being created out of thin air have the potential to, just like thin air balloons, pop and burst and go to nothing. So the idea that we're being charged money, or at least Germans are being charged money to hold their money, is ridiculous. And it makes a lot of people think, well, maybe they should be holding gold in their portfolio if they're going to spend the money. You might as well put it somewhere where it's protected.
1-877-8-SILVER, therealmoneyshow.com. Okay, our special guest, Marc Faber, is ready to go here in a couple minutes. First, Jeremy, in the next few minutes or minute anyway, tell me about the Swiss gold referendum.
Yeah, this is a very interesting initiative. There's three things going on that Swiss voters are getting involved in. One is whether or not the Swiss National Bank should increase its gold reserves up to 20%. Should they stop selling precious metals altogether? And should it be held totally within the country? Right now, it's being held in England and partially in Canada. This is a very big thing. The fact that the Swiss are even looking at this to say we need to increase our reserves, they were the last people to get off the gold standard and join the fiat party. The fact that they're coming back to the table saying maybe we should hold it really doesn't matter if it passes or not. It's part of the conversation. Getting gold and silver part of that conversation as a store of wealth is very important. For anyone that's looked at what we know, and we're going to talk to Marc Faber, but when we look at what we know, what's happening in these markets, and you see the prices being hit right now, you've got to think this is a great buying opportunity to get involved in the market. We have our e-commerce store. You can go to guildhallwealth.com. Click on the button on the right there, and you can go straight to our e-store where you can buy physical precious metals. If you're looking to store more than, let's say, 1,000 ounces of silver, you can also look at the depository for secured, allocated, segregated bullion where you can have it fully insured for ease of liquidity as well. So definitely go to guildhallwealth.com for further information on that, or to request the Precious Metal Advisor, as I'd mentioned, some of our aspects, some of the points that we talked about last week.
And call this number, 1-877-8-SILVER, and therealmoneyshow.com. And back with more of The Real Money Show. The number is 1-877-8-SILVER, therealmoneyshow.com. He's on the line, ready to go. Marc Faber, author of Gloom, Doom, and Bloom Report. Jeremy's here.
So it's great to have Marc Faber here on the show. How are you doing today, Marc?
I'm fine, and yourself?
I'm doing great. Interesting times.
Your listeners are also fine.
Yes, I hope so. I hope they're hanging in there with the current pricing in bullion. These are definitely interesting times. What are you making of the markets these days? We've certainly seemed to enter a surreal moment here with the U.S. dollar being high and the stock market high. What are your thoughts right now?
Well, the markets are unpredictable, and we have, as a result of monetary interventions, more volatility than less. And concerning gold and silver and other precious metals like palladium and platinum, I would say investors always say, I want to buy low and sell high. But they never do that. They always buy high and sell low. So the weakness in precious metals is distressing some people who have an overweight in precious metals. My view is this gives now people an opportunity to buy precious metals at a low price. Equally, I think the U.S. stock market is at a high price. Now, it doesn't mean that precious metals will go lower and that the stock market won't go higher. I'm just saying, looking at asset classes, real estate, stocks, bonds, commodities, and precious metals, I think precious metals are now relatively inexpensive. Can they go down another 10, 20%? Possible. But it's better to buy gold at this level than it was at 1900.
They've certainly been traditionally a good place to put assets in terms of protecting wealth, etc. Where do you feel that gold and silver are there to protect wealth in lieu of the high stock prices, and where do you see things eventually turning out?
Well, my view is, given the interventions by central banks and their desire to expropriate people with artificially low interest rates, say you put money on deposit with a bank, the rate of cost of living increases, or the rate of consumer price increases, of course, much higher than what you can get on bank deposits. So given these interventions by central banks and governments, we don't know what the outcome will be. My view is that the outcome is not going to be good. And I want to own physical gold and silver at all times, but not in the United States, obviously not.
Why do you think it is important to hold physical gold or silver?
To own the physical is like an insurance policy. Let's say you take any life insurance policy or a health insurance policy or disability insurance or whatever it is. You don't hope that you will need it, but you do it. And I own gold, and I will never ever sell any gold that I own, for the simple reason that this is a diversification out of financial assets. I have done very well out of financial assets. In fact, I can hardly believe that I've done so well, being always on the bearish side of the world. But I don't trust the financial markets. I think the whole thing is one day going to completely implode and collapse.
Hope you're enjoying the interview. For an investor kit, this is the number to call, 1-877-8-SILVER.
It's Paul Wiseman here. The U.S. government right now has a deficit of $18 trillion, close to it. How can that ever get paid off?
it will never be paid off. Never. No government can pay it off. They can roll it over. And in some cases, they roll it over, like the Japanese, by having the central bank buying all the government debt. This has also happened to some extent in the US, but not as extremely as in Japan. And so over time, you will see that the purchasing power of money will diminish. There's no question about it.
So governments will eventually confiscate everybody's wealth by printing more money.
Well, they won't confiscate everybody's wealth. They'll never confiscate their own wealth that was earned through corruption. That will never happen. The government and the interest of the people are completely disconnected. They have no relationship. Governments make money. It's a different group of people. And so I believe that the way everything will eventually end up is they'll print and print and print, and one day it doesn't work, and then they blame a few rich people. It's not the 1%. It's not even the 0.1%. It's the 0.01%. They blame them and will go to the people and tell them, look, why aren't you doing well? Because of the 0.01%, and so let's take away something from them. And this will happen, and it won't work. That's the problem, it won't work. But cosmetically it will work for maybe 1 year or 2 years, and after the whole system will break.
So do you think we're headed in for more rounds of quantitative easing?
Yes, if the S&P drops 20% from whatever level that is, we're now at 2,000, whatever it is, drops from here 20%. Maybe it doesn't drop from here. Maybe we go to S&P 3,000. Who knows? I don't think so, but if we go there and it drops 20%, for sure they will print, for sure. As a normal person, and I always tell everybody, look, I should bless Bernanke and Yellen and all these clowns that they increased my net asset value because everything I own, real estate, stocks, bonds, and so forth, went up in price. I should be grateful to them. But as a human being, as an observer of the world, as an economist, I really feel very distressed.
And what has you most concerned?
I don't know whether it's the greatest concern are geopolitical issues but in my view, I think in the Western world, we have now reached the stage of socialism and an entitlement society where you have this political correctness and this everybody thinks that the state owes them something and so forth and so on. Tonight I was in a bar and I watched some movies from the 60s about the singers at that time. This was, in my view, a genuine society. They didn't do it for the money alone. Today you open up whatever it is, music channels or so, it's all a Botox economy. It's all BS, self-promotion. There's no heart to it anymore. And I think in the Western world, we have very few people who are still genuine, hard-working people who wanted to give something to society. And now we have a society that wants to be given by the government. And not just in the U.S. I'm not arguing against the U.S. It's the same in Western Europe. But it doesn't work.
Hope you're enjoying this interview with Marc Faber. To get an investor kit, the number to call is 1-877-8-SILVER.
What are you feeling about the unemployment rate that the U.S. government gives out every week, every month? I mean, I know we all...
Don't make me laugh.
Well, I'm going to make you laugh because, we're on the radio week in, week out, and we discuss that this is smoke and mirrors. The emperor's got no clothes. Nobody seems to get it. Only the insiders that have knowledge and know what's going on. But what is your opinion of this?
Well, my opinion is irrelevant. I think these statistics are all doctored. But, I mean, in America, Paul Singer, he's a hedge fund manager. He runs over $20 billion. And I don't know him, but he said it the right way. All these economic statistics that are published by the government are fake. And the fact is simply this. Okay, statistically the unemployment rate has gone down, but equally the labor participation rate is at like a 30 years low. If everything was so hunky-dory, why is it that the home ownership rate is at the 30 years low? People don't have the money. They can't buy homes. It's an affordability issue. And look, I want to tell you something. I started to work in the 70s. At that time, if I had a salary and I put some money on the side, I put it in the bank at an interest rate or in treasury notes at an interest rate of, say, 6% per annum. So even with my brain that is not very smart, I compounded the money at 6%. Then interest rates went to 15%. At some stage, I compounded the money at 14%. Now, you start to work, or your children start to work. They work hard. They have basically living expenses that are such that they can hardly save any money. But say, assuming they live very frugally, which they want, because they're your children, they put their money at zero interest rates in the bank. So how can they build wealth? Okay, they buy stocks, but stocks are not cheap.
And just before we go, I want to make sure that people can get in touch with you and get your reports for the Gloom, Boom, Doom report. How did people get in touch with you?
Well, basically through the website, gloomboomdoom.com.
And we're also going to
send an email to you.
And we're also going to have that on our website for people to get to. I did want to ask you a quick question, by the way. What do you make of the drop in oil pricing lately?
Well, there have been a lot of commentaries, and some people say Saudi Arabia is manipulating the price lower or whatever it is. My sense is, if I look at the global bond market, French bonds yield 10-year bonds. I'm talking here. French bonds yield 1.21% today. German bonds less than 0.9%. 10-year bonds. Swiss bonds 0.43%. Japanese bonds 0.45%. U.S. government bonds 2.35%. The issue I really want to say is the bond market is not completely stupid. The bond market seems to tell us that the global economy is weakening. The stock market seems to say that the global economy is strengthening. Somebody will be wrong. And I would bet on the bond market. I don't think that it's a good investment to buy 10 years U.S. Treasuries at 2.3%, but you understand, maybe stocks are even worse. Who knows? That's why when you asked me at the beginning, what should investors do? I said, you have to be diversified. We don't know how the world will look like in 5 years' time. And I believe that for the next 6 to 12 months, interest rates are unlikely to go up substantially. Will they go up substantially in future? Yes. But if they do, I can tell you that the stock market is going to get hit very hard.
One more question, actually, Mark, before we have to go. Would you encourage people to... We have actually a depository in the US and Canada and also in Singapore. Would you encourage people to own gold and silver outside the US and Canadian banking system?
Yes, for sure. I would encourage people only to own physical gold outside the U.S.
Makes a lot of sense. Because at Guildhall,
I would encourage people not to go into the U.S. at all. After all the bad experiences I had with immigration in the U.S.
Okay. At Guildhall, we have availability for depository, which is safe, secure, allocated, segregated. We give our clients bar numbers and it's titled to them. So I just wondered if you thought that owning product out of the U.S. in Singapore and in Canada would be that wise decision.
Yes, I think so. But equally, I'm here to give an interview about my own views. I'm not here to advertise any product. But I think if I were a U.S. citizen or any person in the world, I would not trust central banks and governments. I would be my own central bank, and then I would put some of my money in gold and silver. Whether it's 10% or 20% or 30%, that I don't know. But I would at least put some of my own money in precious metals. And as I said before, outside of the great empire of the United States.
Marc Faber, it's been an absolute pleasure. I want to thank you very much for joining us here on The Real Money Show.
My pleasure. Thank you.
And we'll take a short break as well. 1-877-8-SILVER is the number to get an investor kit and online, therealmoneyshow.com.